Andy Shea, let's turn now to global credit markets. In the US, the three large commercial banks, supported by the US Treasury, are hoping to set up a so-called super fund to buy distressed mortgage assets. Sitting here in Shanghai, does that strike you as the right way to resolve the problems in the US credit market?
The U.S. is experiencing something that happened in Asia 10 years ago, basically borrowing money, spending the money they don't have. So it's for us is that we expected the U.S. to have an adjustment. That's what happens after you have a debt binge. But what's going on in America is quite amazing. Is that whatever they're trying to do, they're trying to prolong this and all. They are not. They're trying to explain away the problem. The super fund thing is really weird. It's because we see these SIVs, structured investment vehicles that these banks have set up. These are really self-dealing vehicles, right? Underwriting products, then sell these products to your own vehicles, then book billions of dollars in profits. This is like the corporate corruption that we saw in Asia 10 years ago. The government should be angry and go out and go after these people. Now, what they are doing is that they're proposing this super fund, to, raising money from these same banks and to buy these assets that people marketed with a value at a much lower price than they like, and they try to keep the real price from appearing. So I think that's very worrisome. The U.S. is walking away from market economy.
So you're not very pleased the way that Hank Paulson at the Treasury Department has performed the last few months. What's your view on the US Fed? Have they done the right thing in the last few months?
I think the U.S. now is trying to deny there's a problem. They assume that American people just cannot accept an adjustment, and their job is to prolong this thing and to prevent the adjustment from happening. I think this is the very wrong approach. A country that has a bubble and after it bursts, it's the most important thing is to deal with it squarely and handle the fallout. The problem in the U.S. is going to be with us for quite a while, and it's because there's a lack of leadership.
So what are the long-term implications of this? Does that mean a bout of global inflation? Does it mean a much bigger recession eventually?
Yeah, I think first is that the U.S. is trying to devalue out of their problem. And for people in Asia, this is a huge challenge because our currencies have been tied with the U.S. dollar ever since the Second World War. It's been the cornerstone for Asian economic development. So how to figure out a world without this anchor is going to be a huge challenge for us. And now we are seeing inflation because the dollar is the base currency for the global economy. It's depreciating, so it's like monetary base is expanding everywhere.
What does that mean for China? Are there big opportunities there for China, for instance, with a declining dollar and perhaps a recession in the U.S.? Could Chinese companies go and make some rather substantial acquisitions in the U.S.?
I think a lot of companies, even student enterprises, are looking at assets in the United States. At some point they want to buy, but there's a problem on the other side. The U.S. government doesn't welcome Chinese money. I think at some point the U.S. government will change its view because when you need money, when you really, really need money, anybody's money is good, right? So the U.S. is not at this point yet. I think in a year's time, the U.S. will welcome Chinese money with open arms. So the entrepreneurial side, I'm not worried about it. I think the Chinese government is really perplexed about what's going on. The U.S. is abandoning its leadership, even though the Chinese government is sometimes sort of is a confrontation to the U.S. government. But deep down, they think that this government is looked after by the U.S. government. This world is looked after by the U.S. government. China should have just fit in. Now the U.S. is abandoning its responsibility. So the Chinese government doesn't know what to do. The key is that we need global cooperation to create a different currency regime. The U.S. government wants every currency to float, right? With multiple strong big currencies, we know there's no equilibrium. So we're going to have a permanently chaotic world. I'm not sure that's the solution.
So Andy, here you are, an economist in Shanghai, telling the U.S. Treasury and the U.S. Federal Reserve to trust the market. Isn't there a bit of an irony here?
Absolutely. I think the Deng Xiaoping sort of went to the U.S. almost 30 years ago, and he came back. He basically said that China was screwed and they got to embrace something different. The Communist Party wants to make money. Actually, everybody's money mad in China, so I think it's gone too far. But the U.S. now is basically shrinking away from this market force, globalization, that it unleashed 20 years ago. So I think that for everybody in Asia, we have a big stake in how the U.S. is going to view the world. And in the next 5 years, it will be very interesting to see how this thing evolves.
Andy Hsieh, independent economist in Shanghai, thank you very much for being with us here today on View from the Markets.
Thank you. Glad to be here.